Good morning, afternoon or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for what's going to be nothing short of another jam-packed daily market update with yours truly on this fabulous Thursday. As always, we have a hell of a lot to get into. We are going to be starting the video off by looking at some news from Ripple in regards to a service that they are now offering for banks. Now, CNBC reporting on this. We've really pivoted recently from being somebody who hadn't been sort of engrossed or entrenched in the XRP hype to somebody that is very much a believer in its success. And of course, that comes technically from what we're looking at, but also fundamentally from what they're actually doing and the positioning that they find themselves in. And this is just another step closer in regards to Ripple as a company, I believe, potentially becoming in the world of tomorrow one of the largest companies in the world, because I think they're going to play a role through distributed ledgers like XRP in transforming the monetary system, whether that be through buying debt up through stable coins, whether that be through essentially instant payments, cross-border payments, you name it. I think XRP is going to facilitate it, and they're certainly in the best position in regards to combining distributed ledgers and the traditional financial system. And XRP is like Marmite. People love or they hate it. I'm trying to think. That's obviously a UK reference. I don't think you have Marmite. I'm sure you might have some sort of a reference. I think you have things like Vegemite and things like that in Australia. I'm trying to think of a US reference for Marmite. Maybe Trump. People either love or hate the guy. But XRP and Ripple I think are going to do very well, and certainly I hold it. We had some news from Standard Chartered. Now, Standard Chartered have given a lot of Bitcoin price predictions. They're now predicting a price prediction for an altcoin. The altcoin that they're predicting the price for is Solana. We'll look at that quickly. Then, of course, today you have the CPI, which is an inflationary gauge. The Fed minutes came out yesterday. Dixie's been rather strong. This has been putting a bit of weight on the cryptocurrency market's shoulders. But in order for this bull market to continue, a large part of that is dependent on the macro situation. There needs to be something more for crypto to do well at this point that it's currently at. And we think that is global liquidity that will ultimately see many things rise, including small cap stocks, which are very sort of similar to very economically driven. I think in much the same way the altcoin market is. Bitcoin's had this great fundamental reason why it's done as well as it has on the back end of the ETFs. But the market more broadly needs a little bit of a push, and we're going to be talking about that. So without further ado, ladies and gents, let's get into the video. Ripple launches a crypto storage service for banks in a bid to diversify. Now, CNBC are actually quite forthcoming when it comes to covering Ripple and XRP. They're a big I think financial player, Ripple as a company, but also it's a big story in regards to the saga between the SEC and, of course, Ripple, Brad and Chris, which recently didn't go the way we perhaps wanted it to. And what I mean by that is the SEC actually appealed or appealed by right to the Second Circuit sort of case trial, if you will, which, of course, is a right that we all have. Of course, this is at your expense as a taxpayer. Ripple said it launched a slew of features aimed at helping banks and fintech store digital tokens as part of a broader push into crypto custody. Now, remember, these guys partnered with, who was it? I'm going to get killed in the comment section. You guys will let me know. Meta something, which was a big deal in regards to crypto custody. And I don't just think for crypto custody in the sense that they want to store other people's cryptos, but they also want to perhaps Ripple as a company play a role in storing the digitized versions of traditional financial assets, and through that then they can do multiple things. Crypto custody, a type of service that helps clients crypto assets in a nascent business for Ripple, which has consolidated its efforts under a single brand called Ripple Custody. Ripple is primarily known for the XRP cryptocurrency and RippleNet, a distributed interbank payment settlement platform. The US blockchain startup Ripple had made a major foray into crypto custody on Thursday. It's Thursday today, launching a new service aimed at helping banks and financial technology firms to store digital assets on behalf of clients. The San Francisco-based company told CNBC it is debuting a slew of features to enable its banking and fintech clientele, of which I think there was a paper release showing that they had over 1,700 contracts essentially signed with financial institutions and fintech companies. A part of a broader push into the custody, a nascent business for Ripple under its recently formed Ripple Custody. These features include, this is interesting, a pre-configured operational and policy setting integration with Ripple's XRP Ledger blockchain platform, monitoring of anti-money laundering risks to maintain compliant, a new feature interfaces that's easier to use and engage. So this is interesting. The move will help Ripple, which is primarily known for its XRP currency, and RippleNet platform to diversify beyond payment settlement business. But it's all going to sort of feature into one another. So it's sort of opening broader clients to the XRP ledger. Ultimately, Ripple are going to be in charge of pushing that. It's pretty huge news. Don't sleep on XRP, guys. I'm telling you, it's going to do something big someday. Next news we have, of course, Standard Chartered now predicting a 5x rise for Solana. Standard Chartered projects Solana's price could rise 5x by 2025. I'm not convinced. Maybe in 2025, perhaps not by then. We've only got a few months left. If Trump wins the election, driven by over 100 million active addresses and a potential ETF launch. The election is, and typically the markets have done quite well. We're going to get into that as a more broader topic. What's going to drive this market in just a second. But typically the markets do quite well post an election. The election cycles happen to align with Bitcoin 4-year cycle, liquidity cycles, etc., etc. And we think that's very much going to be the case this time. Yesterday, I interviewed an Elliotician who actually thinks the top of the bull market is a few months away. And he doesn't essentially think, he thinks it's also going to have a couple months stint, and that's going to be it for them. We'll be releasing that video later on. He's an Elliotician I'm sure many of you are familiar with. Of course, that's opposed to our view, but it's good to get an opposing view, certainly technically, on the channel and shared. Before we dive into some of the drivers, yesterday, of course, you had the Fed minutes. Fed officials were divided on whether to cut rates by 0.5 point in September. The minutes show Federal Reserve officials at the September meeting agreed to cut rates by, but were unsure of how aggressive to get. Minutes released Wednesday indicate that a substantial majority of participants favoured cutting by 0.5 percentage point, though some expressed misgiving about the going that large. Bank of England Bailey also came out and said a similar thing recently, which is good news. Great documentary, actually. Not documentary, podcast. Just want to interject, because I know many of you are watching from the UK, from Kwasi Kwarteng, who was, of course, the Chancellor when Liz Truss. I was in favour of what Liz Truss was putting forward with those tax cuts. You know, I'm actually a big believer that if you lower taxes, you'll increase tax revenue because people won't go so far out of their way to dodge them, and you'll attract business and things like this. Great interview that he did. Go and check my Twitter out for that. I can't remember who it was with. It's with a UK podcaster, but really insightful, certainly in regards to the current state of things and what Labour's trying to do. Since the meeting, economic indicators have shown that the labour market is perhaps stronger than officials favouring the 50 basis points had expected. So that's strong data that we got. We're going to get some interesting data. It's probably out by the time many of you are watching this, and also unemployment changes. That non-farm payroll that we got was a double-edged sword. So we don't want a recessionary environment for markets to do well. But with it being strong and showing no recession, which I don't think the people that say we're in a recession, just put your evidence for that. One metric, okay, that shows we're in a recession in the comment section right now. We've dismissed that largely. The data's good. In regards to that non-farm payroll, what that really did was say, okay, it's going to be a good environment for things generally, which is non-recessionary. Markets don't do well in recessionary environments. But at the same time, it doesn't sort of force the Fed's hand in regards to cutting interest rates. And I think this is likely why you've seen a strong dollar. And of course, the correlation, we still have further downside targets for the DXY. There's always been a correlation between the dollar, the likes of global liquidity, which is inversely correlated to, or correlated to Bitcoin, and inversely correlated to the DXY. So let's actually throw the DXY chart on here, because this is ultimately what's going to be driving the markets. You know, you can see periods of expansion in global liquidity, the dollar comes down. And obviously we know what happened in March 2020, but it was also the case, dollar down back in 2017 on an expansion of global liquidity. so on and so forth. So we'll take the dollar off because we're confusing people. The main driver of this bull market, in my opinion, is a generally bullish environment for risk across the board, and we've got lots of targets in regards to that. S&P making its way toward our target, etc., etc. That's going to be driven by global liquidity, which is going to be driven by central banks, and ultimately the dollar, in regards to where we think it's going, is essentially predicting that. And I do expect the Bitcoin sort of 4-year cycle to play out. Some will say, okay, it hasn't played out to date. I think the evidence is slightly different when you look at the Bitcoin 4-year cycle chart. The only anomaly is that Bitcoin's gone and put in a high pre-halving. I think that's explainable by institutional involvement. Just like small cap stocks, when I look at a lot of small cap stocks, I'll share with you a couple actually. PayPal's one I'm looking at the moment. Roblox, this can have a major move in my opinion. And you can see how correlated these are with global liquidity, but markets will front run. There's quite a few stocks actually I'm looking at. This is one that's already gone. PayPal, let's show you. PayPal and small cap cryptos are very correlated. You can see, look at PayPal with global liquidity, but these are all showing signs of life. And I think as you get that global liquidity upticking like we expect it to, you'll see markets generally do well, and this is what's going to sort of create that alt season. And I don't think Bitcoin's too far away from sort of completing the corrective phase that it's in. It's just a bit lackluster. You know, the October can get off to a great start. It could also get off to a bit of a slow one. Toast, by the way, another small cap stock I'm looking at that recently broke out for us. So the main driver of this bull market, and we think the dollar signals that, we think monetary policy signals that, and we think markets technically are positioned for that, is of course global liquidity, which is going to see all these cycles drive, and that's ultimately largely going to depend on central banks. And we're yet to really see it thus far, which would explain why I think the altcoin market is kind of floundering in the manner that it is. Although some alts being very strong, we have a number of 100x's in the Patreon from where they currently are. One of them is actually my second largest position. So do consider becoming a patron. We're also going to open up a monthly tier, a yearly tier, where if you join on an annual basis, you'll get a discount on the underlying overall price. You'll also unlock all of the courses. We will offer that. So that's it from me, ladies and gents. I'm going to love and leave you on that note. Have a magical Thursday, and I'll see you all in the next one. Let me know your thoughts, comments, and concerns in the comment section. See you all in the next one.